I started investing in Robinhood because I felt that they were a new generation financial services company that is part brokerage company for traditional stocks, a good cryptocurrency exchange, as well as just new products that the younger investor is interested in. They have out operated the other brokerages and created a really fertile space for themselves in that market. I'm glad I invested in them. They had their earnings call today, and the earnings were positive, in my opinion. I'd like to go over the earnings report, go over Robinhood fundamentals, value the company, and then let you know what I'm planning to do with this stock. I'm currently a stockholder, and I'll make a decision to buy more shares, hold, or sell my shares at the end of this video. Let's take a look at the earnings that Robinhood produced. Robinhood was able to grow their revenues by 40% in this quarter. That is excellent. If you compare the quarter they closed compared to the same quarter last year, their earnings per share grew to 18 cents per share. 21 cents per share, which is up 18 cents per share compared to last year. Excellent. The deposits went up 41%. All those things show that Robinhood's a desirable company to their account holders, to new account holders, where they're bringing more funds to that company and buying more of their financial services, buying more stocks, buying more cryptocurrencies on Robinhood. All those things are excellent measures and show that Robinhood had a good quarter. The balance sheet looks excellent for Robinhood. They carry a lot of cash and cash equivalents. So overall, the company is very strong and has a strong cash position with regards to the balance sheet. They don't carry a whole lot of debt. They carry more cash than debt. So the balance sheet's in very good health for Robinhood. A negative surprise that I found is in the cash statement. Their cash from operations went down substantially in the current quarter and for the first 6 months of 2024. It actually went from a positive over $1 billion of cash from operations to 569 million to the negative on cash from operations. So that definitely is something that I didn't expect. I'm going to use a more conservative forecast of cash flows that I expect out of Robinhood based on the actuals that I'm seeing here. I still see Robinhood as a free cash flow generating company. They are really adjusting the cash they need to put into certain businesses that require cash. I think it's a temporary one-time effect on their statement of cash flows. Looking at additional fundamentals for Robinhood, the market cap for the company is 15 billion. Not a very big market cap. I would say they're still considered a small cap or even a medium cap company. They have $2 billion of revenue and have a PE for the current year of 115. The reason for that is they just became profitable. Their earnings per share is quite low, but you can see that next year it's going to go down substantially to 32.93. Analysts think it's discounted, but they have a hold. And I think a reason for it, it's really gone up a lot over the past year, even though they've had a lot of pullback in the last month. If you look at the year chart, it's still up 54%. So it's just been a really good productive stock in my portfolio. It's been a good productive stock for anybody who owned Robinhood over the past year. So looking at their financials, you can see that their income has been growing nicely in 23 and in the trailing 12 months. Really mid-30s growth rate. In the most recent quarter, they grew over 40%. So growth is excellent at Robinhood. The financials or the revenue growth has been a little up and down. We had quite a down year in the stock market in 2022. So I think there was less trading in that year, and cryptocurrencies were really down that year as well. So that's what caused a negative growth rate in 2022. But now that markets are doing well, Robinhood is just doing great from a revenue standpoint. 16 analysts cover the stock and are reported on stockanalysis.com. And the ranges of price targets range from the high being 30, the low being 11. On average, analysts have an average target price of $24. That's 24% higher than the current price, which is a good price target. Looking at earnings per share, they expect that it's going to be 54 cents per share this year, and it's going to be around that number for the next couple of years. So I'll use that information as I value the company using earnings per share. I valued the company using a forecast of free cash flows I expect from Robinhood. I also used the earnings per share that I expect from Robinhood. And I came to a conclusion that the stock is discounted by 20%. Let me go through free cash flows first. So I put together my estimate of cash flows that I expect starting with 400 million in the current year. I previously had a number around 800 million, but given that they did have a negative quarter, I really cut that in half. And my growth rate on that 400 million is 20%, and I'm quite comfortable with that because they've had quarters where they were above $1 billion in free cash flow, years where they were above $1 billion in free cash flow. And terminal value would be at 5%. 5% being a little bit of a high growth rate because they're such a high growth company. They could far exceed this cash forecast, but it's a conservative forecast that I want to go with. When I discount all those free cash flows by 9%, I get to a value of all those cash flows, net present value of $13.4 billion. I'm going to add the cash on the balance sheet and get to an equity value of $18.3 billion. Compare it to the current market cap, it gives us about a 20% discount on Robinhood. Earnings per share, it's expected they're going to do about 54 cents. And I'm going to use a P of 36. This is a high growth company, really exciting company. I could use a higher PE, but I'll go with 36. Have a reasonable growth rate of 6%. That gives us a stock value of $20.61. But the shares are trading for $17.29. So we get a 19% discount if we use earnings per share. Together, they combine to have a blended discount rate of 20%. 20% on a company that I believe is one of the better companies, one of the newer companies in financial services that's really making a name for itself and separating itself from the other brokerages. How desirable do I believe Robinhood is as a business? Now, my preference is to find businesses that are in the green. These are businesses that have strong barriers of entry, that really have a marketplace where they are the best. They're the number one player. They can grow their revenues while expanding their margins. They can generate free cash flows. They have a lot of addressable market to grow in. And I try to stay away from companies in the red, which are companies in old industries that have depleting businesses. Revenue growth is hard to come by. Margins are really low. Cash flow is very low. Then there's gray, which is companies that are okay, but I would really want a big discount in the gray zones. I happen to believe that Robinhood is in the green. And the reason I feel that way is that Robinhood never set out to be like the other brokerages. They came into the space and really started disrupting things from phase one. They're the ones that we should thank for zero cost trades because they innovated that. Now they're going into bank accounts, checking accounts, that type of product. I could really disrupt banking as an example. Cryptocurrencies, they make it easy to invest in crypto, which is an asset class that a lot of young investors want to be in. The way they have the user interface for Robinhood is very different. Classically, the other brokerages have a more tabular experience with excess information and data, where Robinhood has a simple interface that their users really like. So overall, Robinhood is creating a space within financial services, which is a very big industry, and making themselves very different so that their customers really have a lot of brand loyalty and really stick to Robinhood. Over time, they're just going to keep getting bigger and bigger, stronger and stronger, more profitable, and generate more cash. So I like Robinhood a lot, and I feel like they have a strong moat around their business, that there's no other business that's like them, that has the energy and the momentum that Robinhood currently has. Having said that, with a 20% discount that's being offered to me and a solid balance sheet, I'm going to keep buying shares of Robinhood and adding to a big position I have in this big bet that I have. This is a small cap stock. I also have big cap stocks like Meta and Google, Amazon. But this is one of the bets that I believe that Robinhood's going to be worth far more because they're doing a lot of things right. So that's my analysis of Robinhood following their earnings report. I hope you found it interesting. Just a reminder, I'm just an investor. Please don't take any of what I'm saying as financial advice. I'm not recommending you buy, hold, or sell Robinhood. Please make your decisions on your investments independent of this video. I appreciate you watching. Good luck investing in 2024.